George of the jungle, strong as he can be.
George, what do you mean I'm self-employed? My company pays me a salary. Don't treat me like a self-employed borrower because I won't make enough money. So, is that you? Have you heard that before? Welcome to thecreditjungle.com today. This is George Anderson, and we're going to discuss what constitutes somebody being self-employed. So, without trying to get into a dissertation on tax returns and things like that, I'm just going to help you so that you can reference your own tax return and make this determination for yourself, because there's certain entries in different numbers and positions and whatnot on the tax return that are going to trigger an underwriter to presume that you are self-employed. And if you are, that's not a deal killer or anything else. It just means that we're going to need to see some additional documentation and maybe have 2 years of tax returns where normally we might only need the W-2 forms. So anyway, the most common form of somebody to be self-employed is somebody that's a sole proprietor. They don't have a separate tax ID number for their business. Everything runs through their social security number, and they would normally get paid on a form 1099. Now you can have 1099s issued to different entities, but if it's issued to your social security number, that's going to show up on your tax return under what is known as Schedule C, which is a sole proprietor. And by the way, we're not looking at the gross income, we're not looking at the biggest number there. You could have grossed $250,000, but if you had $200,000 in expenses on there, with a few exceptions of some things that you can add back, your adjusted gross income, or what we would call in underwriting your effective income, would only be about $50,000. So we're looking at, we see a Schedule C. We don't need a copy of the 1099, but if you're issued one, the IRS knows that you better be putting that somewhere on there and declaring that income, because if you don't take any deductions against it, they're going to tax it all as taxable income. So the other one here is S corporations, limited liability companies, partnerships, and I forgot to put PC, professional corporation, professional companies up there. Those are also considered self-employed, and they would file a separate business tax return with a different tax ID number, and that's going to be a partnership or an S-corp tax return. And where that shows up on your personal return, it shows up on your Schedule E that you had some income there. And so anything that shows up on Schedule E, now it could be income from a rental property, which doesn't put you into that self-employed category, but this is rents, royalties, S corporations, and all that will come in there. And how do we determine your percentage of ownership? That is a separate form over here that's issued as a K-1. Okay, so if you think about what a W-2 is, a W-2 is a wage form, and that's going to have deductions for taxes and insurance and everything else in there. I'm sorry, for Social Security, state, federal, FUTA, SUTA, Medicare, Medicaid, all of that stuff. But a K-1 is not that. It's like a 1099, but it's issued to the company or to you as an individual from the company. And the nice thing about the K-1 form is that in there it will indicate what percentage of the business you own. So at what point are you considered self-employed? Well, that number is 25% or greater. So if you own 25% or more of one of these entities, then you are considered self-employed, and your income is going to be treated a little bit differently than if you had 24% ownership, for example. So the other one here, and this is, you don't see this too often, but I'm just going to mention it because it's there. This is a full corporation instead of a subchapter S. A C corporation doesn't issue 1099s to the owner, doesn't issue a K-1 to the owner, but what it will do is they will issue dividends, okay? And so if we see dividends on your Schedule B dividends, C Corp, just kind of giving you the matrix here, the underwriter is going to say, well, we need a letter from the CFO or for somebody in human resources. We need something on the letterhead of this corporation as to what percentage of the business this individual owns. Because all three of these, you can have a W-2 issued to yourself, from the corporation to yourself, and from a C Corp to yourself. And if you take all of that income as complete through your W-2, then none of these triggers might come in here, but you're going to pay a little bit more in taxes. And so that's why people will go for these different options here. This one, by the way, doesn't save you any money in payroll taxes or in state or federal income taxes. The state of Utah, I've got another video on this. It's basically $75 in about 20 minutes to set up one of these in there, and you can save yourself some payroll taxes, but go consult with a CPA on that. But anyway, so this is the definition here. So 25% ownership, a sole proprietor is going to almost always be the 100% owner. These are going to be some different varying percentages in there, and we're going to look for supplemental documentation to show what that ownership interest is. Now, if you're K1, if the business here showed, $25,000, chances are that if you own 25%, that the business had a $100,000 profit, 25% of which was yours. So hopefully that makes a little bit of sense to help identify where you might be on this equation and what you can do before tax time to make sure that you're showing enough income in case you want to purchase a home or qualify for a mortgage later this year. So thanks for coming into thecreditjungle.com today. This is George Anderson. Push button, ring the bell, subscribe, get Mortgage Professional, and I would be delighted to help you with your situation. Have a great day.